Retirement planning can be very confusing, and oftentimes the road to retirement is filled with a lot of bumps, curves, up and downs, and potholes along the way. So this is a visual that I like to use with a lot of my clients to get them thinking about retirement and help them visualize their future and how they should be saving. The very first thing we need to talk about, though, is developing good financial habits. If you don't have them, you need to get them. This is a book that I wrote that will help you do exactly that. Please feel free to check it out. Let's start for a first career. You're just getting out of school, out of high school, out of college, and you're getting your first job. The very first thing that you need to be doing is funding your taxable accounts. This is going to be your checking and savings accounts. Get your emergency fund set up, have at least 3 to 6 months of living expenses saved inside of that account. The taxable account, money that goes in, no tax benefit. You're going to pay interest, you're going to pay tax on the interest every year, and if you invest in stocks, land, real estate, some of these things, you'll have capital gains due if you liquidate them as well. Let's move on in life. Say you've got your emergency fund set up, you've got your great budgeting habits, your good financial habits are down, great. Now you're to the point where you can access the tax-deferred bucket. This is going to be most commonly your employer retirement plan. You put in $1, employer puts in $1. You put in $1, employer puts in $1. Pre-tax going in, so you save on taxes today on money going in. However, it's taxable on the back end when you take it out at retirement time. This is a great tool for you to save for your retirement. Use it. This is going to be your 401k and IRA. The third bucket, and really the most unique bucket, is the tax-free tax advantage bucket. Now, money that goes into this is going to be non-deductible, meaning there's no tax break for doing this. Okay? This is going to be like your Roth IRA and your cash value life insurance policies, maybe an HSA account that you're funding as well. Money that goes in, non-deductible. However, when you take it out at retirement time, as long as everything's structured properly, there will be no taxes due. Tax-free on the distribution end as long as everything's structured properly. So all along your working career, hopefully you're putting into these different buckets. You got your emergency funds saved up, these kind of things. What's very important that I want you guys to understand is at retirement time, if you have money in these first two buckets, you probably will pay tax of some form. If you have money in the third bucket and everything's structured properly, there'll be no taxes at distribution time. So my own personal thinking is if I fast forward 30 to 40 years down the road and I'm retired, I want all of my money, if possible, to be in this tax-free bucket. Okay? And I can do that at certain times during my life. I can transfer from different buckets to get in my tax-free bucket. Tax-free retirement income is an amazing thing. There are many different ways to save for your future retirement. Hopefully this visualization strategy helps you think about some of the different accounts that you can be and should be using for your future retirement income. If you have questions or need help planning for your own retirement, please feel free to give me a call or drop me an email. I'm always here to help.